We just finished the first half of the year. The numbers are in, and Old Mutual's Global Equity Fund is the second best performing unit trust in South Africa. It put on 33% on behalf of unit holders for the first 6 months. The fund remains fully invested in foreign equities, that's what it's called. And joining us to chat about the strategy from London is the fund's manager, Ian Heslop. Of course, he's with Old Mutual. Well done, Ian. You're keeping it rolling because you're up 63% year on year. Were it not for Alan Gray being around, you would have been number one.
Thank you very much for that. We're very pleased with the performance at the moment, obviously. And hello from sunny London, which is not something you probably hear every day.
The Alan Gray Orbis Fund was just slightly ahead of you. Do you take a close look at where the competitors are, or are you more focused on keeping your spreads between the US, where you've got about a third of your portfolio tied up?
Yeah, it's a good question. Obviously, we're interested in what competitors are doing in relation to their performance, but I think what we try and do is stick to what we do well. I think one of the things that we are very aware of is what we can do well and what we can't do well. And one of the things that we don't tend to do is take large positions towards or away from individual countries. We're very much trying to pick stocks within individual countries that we think will outperform or underperform, and that's done very well over the past going up to 3 years now, isolating those stocks that will outperform their individual markets and then using that stock selection to add value to portfolios consistently through time.
Ian, it's Lindsay in Cape Town. Well done on the 63% year on year. How much of that is currency translation and how much of that is the actual appreciation of the stocks?
Yeah, again, a good question. So obviously we're running this portfolio from London in GBP, so there is some currency translation in the absolute numbers, but what we tend to run the portfolio towards is relative returns. So we run against a GBP benchmark as well as running a GBP fund. So our alpha is around about 15 to 16% ahead of benchmark in the previous 12 months. So a lot of it is stock selection, but obviously, one of the things that you get when you're investing in an offshore fund is the opportunity when the rand is moving in the right direction to get that performance, a weakening rand, that performance that does obviously improve the overall absolute performance of your fund. But very much for me, it's running the portfolio against a benchmark that's in the same currency that we run the fund against, and outperforming that benchmark over an extended period of time.
Ian, you say stock selection, but the single biggest holding in your fund is only 1.3% of the fund overall. So you've got a lot of stocks that you're selecting there. Wouldn't you rather be better suited taking bigger bets?
Yeah. Yeah, again, it's a good question. What we try to achieve with this portfolio is to blend different characteristics that make the best stock, and we'll blend different characteristics based on the type of market that we're in. Really, the way that we run money is not well suited to being a very concentrated portfolio. Really, ultimately, what you're getting there when you're concentrating the portfolio is, certainly in the way that we run money, you're concentrating your stock-specific risk. So we are trying to blend multiple characteristics that make the best stock. We'll adjust the characteristics based on the environment, the type of market that we're in, but it does fit much better in a much more diversified portfolio, upwards of 250 positions. That does work much more efficiently in the way that we actually harvest alpha over the longer term.
Ian, you say blending characteristics to the type of market that we're in. Is there anything that's happened over the last, let's say, even 24 hours? I mean, you kind of ignored what happened with Mr. Bernanke last night, and also with Japan saying that their economy is recovering. Is this a sort of moment where you sit down with your team at Old Mutual Asset Management and say to yourself, actually, this changes now, that 1.3% stock, we're now going to cut 2.6%, we're going to go into other things? Are there moments like this when you sit down and change the characteristics of your fund?
Absolutely. But remember that this is a systematic process. So we are harvesting information or data that we can see, and then we'll take a view that's based on the environment that we can see. So very much that we've seen a very interesting period certainly over the last 6 to 9 months, where the U.S. market. If we look at the US market's been driven by defensives, so the defensive sectors have been outperforming in a rising market, and that's somewhat unusual. This portfolio, what it allows us to do is recognize that the market is rising, but also recognize that which sectors are actually investors in buying in any given period, and making sure that the portfolio is efficiently placed for that. Now, we do have periods like we've seen over the last few days. I don't think Ben Bernanke is saying anything different than what he said over the past sort of 18 months. The tapering that we're going to see is coming, but I don't think it's necessarily going to happen in the short term. And these gyrations that you're seeing is basically investors trying to understand what the Fed's view is. And if you look at the information that we saw last night, it seems that the Fed is unsure of its own view. It's pretty equally split over whether or not there should be some removal of or tapering of QE, or whether we should continue. Ultimately, what we're saying is this is difficult. These types of forecasting, is Chinese GDP going to be 7.6? Is it going to be 7? Is it going to be 8? These types of forecasts are difficult to make. So really take a step back. Let's try and understand what the market is doing. What are investors actually doing in aggregate? Is the volatility rising or falling in markets? Is market direction positive or negative? What type of sectors are outperforming currently? Can we pick a portfolio of stocks that blends these characteristics that we need to understand, from a forecasting environment, to understand which characteristics will outperform, and then basically pick the best of breed stocks in that environment?